All right, guys. So everybody was complaining yesterday about me starting late, and so I'm going to go ahead and start early this morning. What's up, Tiny, Camille, AP, Radical, or WAM3? What's up, guys? Good morning. Good morning. Today is CPI inflation data. It's the biggest day of the month, maybe. Aside from, yeah, it's the biggest day of the month, probably. CPI is expected today at 0.2%. Month over month and 2.6% year over year. Now the year over year is actually dropping from 2.9% last time, so they are expecting inflation to come in low. All right. So again, here's the expectational numbers here. Yesterday we had GameStop earnings. Let me mute this and then put this up and then. All right. Honestly, I don't know what's wrong with my internet, dude. I've got fiber optic. My internet's fine. Like, it works. Like, my internet's fine. It works. But, like, it's only running 100 up and 100 down, which is low. It's supposed to give me 1,000 up and 1,000 down. And it's been like this for, like, a week now. All right. All right, guys. I'm seeing some debate tweets that are funny. The numbers drop at 8:30. Let me put a timer up. My bad, guys. Here, numbers drop at 8:30. We got an hour and a half left until the numbers come out. Hour and 26 and a half minutes to be exact. But yeah. GameStop earnings came out. So GameStop earnings, they showed up. GameStop earnings showed up mixed. They had more profit than expected, but less revenue. Which revenue is generally the more important one. All right, guys. Yeah, I watched only a part of the debate. I couldn't watch all of it. It's just too. Like, in the end, in my opinion, everybody thinks it means something, but it really doesn't. And, like, whoever's going to win is going to win. And I don't know. I just hate politics, dude. I really do. I just genuinely have distaste for the entire realm of politics. There's too much bureaucrat nonsense. Everybody's acting like nobody ever does anything. No matter who gets elected, nobody ever does anything, right? And it's all just basically like, I just can't handle it. Alright. Yeah, CPI inflation data, a massive report today. Inflation data is big. Oil. Yeah, is oil. I'm looking at oil. So oil rebounded a lot this morning so far, at least. Was down big yesterday. Still hasn't rebounded all the way back. Like yesterday, the drop started at like 69. It's at currently 67. So it's still down a little bit, but it's basically flat over the last 2 days. Nvidia had a flat day yesterday as well, and I believe we're going to have choppiness leading into today also. What's up, Rigo, Crash, Chris, Cole, Usman, Martin, Stans, Hindra, Pawn, The Shadow, MJ, Giannis, S, App, Louis, Rise, Milk, Camille, Tiny, Orkin, Womble, 3. Not a normal name in the bunch, guys. Not a normal name in the freaking bunch. Johnny, what's up, dude? Yair, what's up, guys? Steve-O, what's up, dude? Alright. Tesla, still at 225s. 225s. All right, guys. Yeah, so there are rumors that one of the people in the political debate was using an earpiece. But I mean, listen, are we going to act like... I try to really not get into politics. I don't. Like, I dislike politics. But are we going to say, like, okay, never mind, you know? Honestly, at this point in time, technology is good enough to where anybody could have one. Yeah, the timer's right there on the screen. What could be the impact on gold? I don't know. CPI expected to dip 2.6% year over year is what's expected. Last time it showed up at 2.9%. Yeah, I really dislike all the realm of politics. I'm not really rooting for anybody. Like, I don't like any of it. It's all stressful and unnecessary to really, like... Yeah. CPI 2.5% or below 2.5 will fuel a 50 basis point cut, and we might see sharpest fall of the year today. Correct me if I'm wrong. I disagree. I don't think a low inflation rate than expected, a lower rate than expected, will cause some big negative reaction in stocks. I just don't think that. It's possible, I guess, and I understand the logic, meaning the lower the inflation rate, the more likely the Fed is to cut rates more aggressively, right? Because the reason the Fed's not going to cut rates is if the economy, is if inflation looks bad, right? If inflation's hot, prices are up, lowering the federal funds rate will make prices worse, right? And so in that regard, the Federal Reserve is not going to want to cut rates aggressively if inflation is still a big looming problem. And so if inflation data comes in lower than expected, is what this person's saying, if inflation comes in lower than expected, then that gives the Fed more of a green light, at least, to cut rates over 25 basis points, like 50, 75 basis points. Now, I still don't think they're going to, even if we get good inflation data today. And I definitely don't think the market's going to react negatively to it, but it's possible. It is possible. I understand the thesis, at least. Yeah. I agree, Ty. Yeah, it's the last CPI before the Fed cut, but the Fed likes to use PCE data, and the last PCE came in good, I think. All right, guys. All right, chat. All right, guys. So again, yeah. What's your prediction? Yeah, I mean, I know everybody might ask, but my prediction, because we've gotten a lot of CPIs correct. Is Jensen speaking at 7:20 at the Goldman Sachs conference today? Is he really? Is he really? I don't see anything about it. Yeah, I see something. Yeah, so Jensen is speaking today. I don't know what time. Let me see. Trying to find a schedule for it. Let's see. Presentations. Barclays. All right. Yeah. So I can listen to it. I don't see it. They need a schedule though. So David Solomon is scheduled to speak. But I don't see anything, man. Like, I see the schedule for him. 7:20 Pacific time. So that is 9:20 Central. Well, maybe we could cover that too. Yeah, we might be able to cover it. Yeah, there's a big old timer on the screen, guys. A big old timer. Yeah, I mean, we could cut. I'm not sure. Anybody know where the schedule is? Yeah, so I see him scheduled to speak today. I'm looking at this now. Goldman Sachs conference. I see this, but I don't see any like details into what they said. Let's see if I can find it. Yeah, so we're looking at it again. Nvidia is at 107. It's almost 108. $10:20 Eastern time is when he's supposed to speech. So we could probably cover that too if we could find out where it's gonna be. We just gotta find it. Yeah, so I'm pretty sure there's no video, there's just audio. But I'm not 100%. Let me try. Yeah, I think I found it.
Wrapping up day one.
Okay, yeah, so this is not it. This is, I'm looking for it. But again, the big thing is CPI inflation data in over an hour. Like, I found some speech, but here's from David Solomon. I don't want David Solomon. I want. So, I see this, but yeah, I'm checking out the Goldman Sachs site's honestly pretty cool. But yeah, we'll try to find it. We'll come back to it. CPI data today. Huge report. So the credit's better for the Q. Tragedy. Your guesstimates are the best in the world. Can we get a guess of CPI? I know, guys. Listen, Japan raising interest rates next week. Fed likely to cut. Yeah, so the Fed is probably going to cut. Again, if we look at the actual probabilities here. Fed is likely to cut 25 basis points. Like, it's pretty probable. At this point, we got 73% betting on a 25 basis point cut here. We got 27% expecting a 50, 25. And again, we'll see what happens today. Inflation data drops. It's expected today, again, at 2.6% year over year. Core CPI is expected at 3.2% year over year, 0.2% month to month. Regular CPI expected at 0.2% month to month. So, yeah. We also have a 10-year note auction at 1 o'clock today. 1 o'clock. And then tomorrow, we have PPI inflation data, a massive report. Hey, beginner trading, think markets are already priced in as expected inflation numbers, but are more concerned with jobs and economic growth data. I don't know. I think the market still pays heavy attention to CPI. We don't know how much they're going to watch it or anything like that, but market still pays a lot of attention to it. We also had GameStop earnings yesterday. You know what? Again, what I said about GameStop, I'll just kind of review what I said yesterday. You know, I've never been one that necessarily really panders to the meme community. I'm a supporter of GameStop. But I think if GameStop's going to survive, it has to pivot. It has to pivot when it still has the audience, the support, the interest to take advantage of it. Because if GameStop waits too long, it has less likelihood of success in a pivot. You know, so GameStop's got to pivot. It's got to do something. It cannot keep its current business model. It just can't. It's not going to work, right? GameStop stock is not where it's at now because of company strength. It's just not. GameStop stock is where it is now because of support from the investment community, not because of good fundamentals. And I think everybody knows that. And I think now's the time to pivot when you still have that support. If you wait, and you know what I don't want to see is GameStop just wait and nothing happen, and they keep trying to kind of take this business model that they have that obviously isn't making much money. A lot of stores are closing, and just kind of sit on that and never make that big run towards something else. And I think they have to. Well, I have a lot of empathy for the meme community. Like GameStop grew my channel a lot, and I made money on it mostly. And so I have to look at exactly what my numbers were. I can't guarantee that. I'm pretty sure I made money on it long term. But GameStop grew my channel. You know, again, my channel prior to GameStop was getting a couple hundred people there only. And then after GameStop, we were getting thousands on some streams. And now, you know, my channel's big enough to where, like, at least once a week, we have a stream that we have over 2,000 people usually at least watching us simultaneous concurrently, you know. So, channel's grown a lot, and I have to give GameStop and that community credit. But I've always called a spade in that regard, and I've always been honest about it. And I think GameStop has to pivot. They have to do it. Yeah. It's all right, Tiny. Bull trap, I don't know. I think a lot of people are going to be waiting on CPI inflation data today. Yeah, gold, 25.50s. Gold sitting at 25.50s. We've got oil at 67s. Yeah, I'm kind of hesitant. My guess, if I had to pick a number for today, I'm going to go at 2.5% year over year. 2.5% is what my guess is. I might be wrong. I don't freaking know. I'm going to go at 2.5% today is what my guess is for CPI. Again, I might be wrong. I don't know what the market's going to do even if we show up there, and it's just a straight up guess, guys. And you know, a lot of people tune in because I've gotten these right historically. I can't guarantee anything. All right, guys. Yeah, I'm reading this post on Twitter about age gaps in relationships. And like, I don't want to say too much about it. Like, I'm like, it's too controversial. But I think if you're 20 something, or if you're in your early 20s and you're with somebody in their 40s, that's a little bit iffy, in my opinion. It's a little sketchy, you know, depending on who it is or what it is. And I think there's always outliers, but yeah, I think that's a little iffy. All right, so GameStop has entered an open market sale agreement for up to 20 million shares of Class A common stock. 20 million. I didn't even see this news yesterday. I'm late on this news. NBA 30-year mortgage rate came out at 6.3%. 6.3%. So a man was arrested for creating fake bands. My wife's Dyson is gone. So my wife, for her birthday one year, I don't know if it was her birthday or Christmas or whatever, but I got her one of those. Any lady knows what I'm talking about. Any female knows what I'm talking about. Specifically the Dyson. What is it called? I got her. It's this. You know, what's it? Hey. What's it called, Maddie? It's the Dyson what?
Dyson Airwrap.
Oh, yeah. I love you.
Love you.
Have a good day, sweetie. Yeah, it's called the Dyson Airwrap. Love you. Yeah, it's called the Dyson Airwrap. That's what it is. But it's like a really, really nice one. Really, really nice one. Yeah. It's like a really fancy hair dryer, but what it is, it's like $1,000. What was that thing? That thing was like $1,000. You know, so I got it for her for like her birthday, like a year or two ago, and my daughter ends up using it as well. My daughter wants one too, but I can't justify spending another $1,000 on a freaking, you know. It's like the big thing. I don't even know what's good about it, but they're into it, so, you know. 120 in Shanghai? Well, maybe. But is it real? Right, my wife's as well. They're all asking her to use it. My daughter wants to use it. And we let my daughter use it, but yeah. But anyways, you guys, check out the mortgage rate. Here's the mortgage rate right here. Look at that. 6.3%. 6.3%. You got it? What? All right. Yeah. Is the music loud? Here, my bad. Let me turn it down. Yeah. So anyway, so I got my wife that Dyson thing, and now she can't find it. And we had a contractor here doing the drywall yesterday. I couldn't imagine they would steal the Dyson Airwrap thing, huh? Like, I tipped the guy too. You know what I mean? I couldn't imagine they would steal that. Right? Like, I generally, like, you know. I can imagine they would. I mean, I get it. It's like $1,000, and like I couldn't imagine they would. Because this is something that's big, that's sitting in our room, right? Like, we're gonna notice it's gone. It's not like something we just don't use. My wife uses it like every day, right? And I generally like want to believe in the best in people, you know. Yeah, that's what I keep telling her. They probably moved it somewhere else, or she probably moved it somewhere else. You know, that's exactly right. Like, that's what I'm telling her, is to like look around, because these guys were nice. I tipped them well. They did a good job. I think she's just panicking because she can't find it. We did have people in our bathroom yesterday, right? Like, we did have a lot of people in our bathroom yesterday doing drywall, so we had to basically move upstairs. And even if they did, I mean, it's all good, you know. I mean, we're good, you know, but yeah. Yeah, that's what I thought. My daughter just went to school. 100%. We'll find it when we stop looking for it. Yeah, my wife's panicking though, because that's like her favorite thing, you know. Yeah, so I didn't really watch the whole thing, but I didn't really watch the whole debate. It's not really something I'm into. I watched bits and pieces of it, just kind of turning it on. Um, all I know is, like, you know, I'm gonna respectfully decline to comment on politics. Gold is pretty much flat today. It went up a little bit yesterday. It's at 25.50s, 25.50s. NASDAQ. Yeah, so I'm looking at the Q, the SPY. They're both down a little bit. You found it? Yeah, I told you, man. Okay. Well, good. I love you. All right. Now, CPI day, I gotta work. But see, I told you. I love you. She found it. I told her, man. You know. Like, I get it. It's like a vulnerable feeling when people are like in our bedroom. You know what I mean? And like, you know, people are like in her bedroom, and it's like a vulnerable feeling. But like, usually people are good. And this dude did a good job. Like I said, I tipped him well. Like, I thought he did a good enough job. Like, I gave him a tip. He was a nice guy. Yeah. And I genuinely doubt he's gonna like risk it to take a freaking, you know. I mean, those air wraps are freaking expensive, you know. But yeah, good. So the S&P is mostly flat. It's slightly down. You can see the previous closing price up here at 549s. At 549s. Yeah, you gotta believe in good people. And this guy was nice, like I said. Nice dude. Like, again, I'm a big believer in just in life in general. Like, you get what you put out there. If you're nice to people and you're good to people and you take care of people, then like you'll get good things back. I really believe that. You know, maybe that means we're living in a simulation. You know, maybe karma is real. Like, I don't know, but I've noticed times in my life where I've spewed out negativity, because I have. Everybody has bad moments and good moments in their life, right? I always remember I get negativity back, right? Like, I get my life seems to turn. And when I do good things, and when I try to be good to people and take care of people and be kind to people, and I generally get good things back. Right? It's what I always try to tell the haters in the chat, the trolls who are always just trying to harass and make fun and like do all this stuff. Like, look, you're making your life worse. Just being here and making your life worse. Trying to talk smack. CPI poll. Do I not have one? My bad, guys. Here, I got you. Hold on. Does a CPI come in higher or lower than the 2.6% expected? All right. Yeah, I don't know the next framework. Like, I've used a little bit of it, but not a lot. All right, guys. So everybody was complaining yesterday. Whoa, I'm sorry. I don't know why. Can you share your thoughts on what you think is going to happen today and discuss both sides of the coin? What will happen to the markets if data is up or down? So I'm going to preface everything I'm about to say with this. I have no idea what's going to happen. No idea if it's going to go up or down. No idea if the market's going to react positively or negatively from this. What I will say is, number one, it depends on inflation data. Number two, it depends on NVIDIA. What NVIDIA does is going to influence the rest of the market. All right, that's number one. Okay, number two is generally, and again, this is generally, take this with a grain of salt, understand this is not definitive, but generally, lower inflation is better, right? So generally, the lower the number the inflation shows up as, the more positive of a reaction that we get in markets. But again, this is certainly not definitive. I would say as we get closer and closer to rate cuts, there's a couple theories that you could have. There's a couple theses you could have about them, hypotheses, whatever you want to call it. There's a couple theories you could have. One of them could be the lower the inflation data, the more likely we are to get a rate cut. And if the market wants a rate cut, because rate cuts stimulate the economy by bringing interest rates down. And by bringing interest rates down, people have more money to spend. Everybody has cheaper access to leverage and lending. And so they spend more and it stimulates the economy. And so by the Federal Reserve cutting rates, it stimulates the economy. And that could be good for stocks. It could also be bad for stocks. And the reason it might be bad is because historically when the Federal Reserve cuts rates, usually it's because something's breaking, something's broken, the economy's looking weak, and people could panic. And so I think the way I look at it right now is that the more the Fed cuts rates, the higher likelihood of a panic in the market. Meaning, if the Fed cuts rates 25 basis points, that's the neutral outcome. I think that's an okay outcome. It's not what I would do personally. I would wait. But it's not like panic-inducing. If the Fed cuts rates over 25, right, I think that is when the market might start to panic. The market might say, hey, something's breaking. The Fed's cutting rates aggressively. And I think the lower the inflation number is, the more likely the Fed is to cut rates more aggressively, like over 25 basis points. And so it's a really nuanced report today. I think it's really hard to predict what happens in terms of like market response. I think generally, again, low inflation is good. Lower CPI is good. The lower the number shows up as, the better. And I'm guessing it comes in at 2.5% year over year. I might be wildly wrong. I have no freaking idea. It might come in higher or lower. It's just a straight up guess. But there's implications around this because of the rate cuts coming next Wednesday. Next Wednesday, we're going to cut rates. Almost certainty we're going to cut rates next Wednesday. It's not 100%, but it's almost certain. You can look at the CME Watch tool, and the CME Watch tool has not been wrong about its decision, at least leading up to it. Like if you look at the CME Watch tool an hour before the rate decision is announced, it's been right for years straight. And so right now they're expecting about 75% chance of a 25 basis point cut, and a 25 basis point cut is neutral. It's as expected. But if we start to go over that, that's when it can induce panic and fear and bearish action in markets. But again, ultimately, cutting rates is stimulating the economy, like I said, and so that can be good for stocks as well. Super nuanced, super nuanced. Let me catch back up on chat. If it comes in low, market drops. If it comes in high, market drops. The only way we get a green day is if the data is exactly as expected. Well, maybe. Yeah, well, food is volatile. That's why, like, you can look at core CPI, which excludes food and energy prices, you know. Yeah, I've heard good things about Next. I think that if inflation is too low, people will worry economy is slowing rather than it coming in at consensus or a bit lower. Yeah, I mean, I agree. I think too low is going to cause panic as well. Thanks, everyone. Could have wished for a better response. Hey, nice, man. So what will happen if it comes out higher versus what will happen if it comes out lower? Nobody really knows. Again, generally higher means higher inflation, more problems. Stronger economy, but more inflation, which is not necessarily good. And generally the market fears inflation right now. Lower means less inflation, but a weaker economy. And so neither one of them is like necessarily good. They can be better or worse for us given any moment in time. Nvidia just went green on the day. So Nvidia just broke over this light blue line, which is the previous closing price. So Nvidia just went technically green on the day, and it's pushing up some. I hope they do not cut rates. Yeah, but they're going to. They're almost certain to cut rates. And you guys know me. I don't like definitive statements, but they're almost certain to cut rates. It's very, 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 very probable. Tesla's still holding its gains at 225. Let's see if it holds. Let's hope Powell gets the memo and does not do any more than 25. Right. I don't think he will. I think Powell's generally pretty balanced. He tries to be balanced, you know. And so I don't think he's going to do crazy. I don't think he's going to scare the market in that way, but he could, you know. Who freaking knows, man? 25 or 50 better for long term? I think 25 is better for long term. I would rather no rate cuts. And again, you get people like, okay, inflation has gone like this, and now it's kind of stabilized, but it doesn't actually go down. Here would be going down. This is the rate at which it goes up. So inflation has gone up dramatically, and now it's kind of slowing. It's not going down, but it's slowing. The only way to make prices literally go down would be to go into a recession or depression, right? And to maintain a restrictive monetary policy stance, meaning keeping interest rates as high as we can for as long as we can, you know? And I think that's necessary right now. People acting like, listen, the problem is if you look at house prices, home prices, super inflated. They've gone up ridiculous amounts. If you look at car prices, super inflated. They've gone up ridiculous amounts, right? $100,000 car used to be a supercar. Now you're definitely not getting a supercar for $100K. You can get a cool car, but it's not going to be some supercar. So everything's inflated. Everything. Real estate's up 70% in the last 5 years. Car prices are obscene. You know, inflation has gone up dramatically over the last 5 or 6 years. And so the problem with all of this, in my opinion, is that cutting rates is going to make that worse, not better. Bringing interest rates down is going to make that problem noticeably worse if we do it too aggressively. Now, again, I don't think we will. I think they're going to be balanced, but I'm for keeping interest rates as high as we can, as long as we can. And yeah, lenders are going to complain. People aren't going to be able to buy houses like they want to with mortgage rates. But again, the problem is that inflation doesn't go down really, and it's gone up a lot in 5 years. And so we should be playing the other side of that. And everybody's looking at the current inflation rate like, hey, it's at 2.6 or 2.8 or whatever. That's fine. But if inflation starts to snowball it can happen really, really, really quickly, and it's going to happen if we maintain low interest rate environment. And again, to give you guys some more context, the other reason inflation happened so bad is because of the economic stimulus that we got. Specifically, we had quantitative easing after 2020 to try to save the economy from, all the stuff. But yeah. So basically, the Fed came in, printed money through quantitative easing. They created bank reserves and then used that to buy financial assets like bonds, injecting liquidity into those markets. And that ultimately helped save us from like a recession and depression in 2020. But it also caused massive inflation spikes. And that's what we saw afterwards. And so, again, I'm still on board with like combating that inflation. It's not sustainable. And nobody here should like inflation, right? Like, yes, it means more economic growth, but at what cost? The problem is like, again, $100,000 a year used to mean something, right? Now, I would say people that make $100K, a lot of them are probably struggling, realistically. If you only make $100K a year, a lot of you guys are probably struggling because of the inflation. It's not as cool. It's not a flex like it used to be anymore. And a lot of people are living check to check with $100K, especially if they don't know how to budget their money and they think that they're rich because they have it in their mind, oh, six figures, and they think that they're doing really, really well when really they're blowing all their money on dumb stuff and they're living check to check and they're struggling. And again, if that bothers you, if you're upset about that, you should want to bring inflation down too. You should want to stop inflation. And the only way you do it is by maintaining a restrictive stance. I hope we don't stop quantitative tightening as well. So QE is basically a form of money printing where the Fed creates bank reserves and then uses that to buy financial assets like bonds and injects liquidity into those markets. And then banks are able to lower interest rates to consumers and prices fluctuate from it. The opposite of that is basically where the Fed is trying to restrict liquidity from those markets, and it causes everything to go higher and interest rate wise. It causes interest rates to go higher. And so I'm okay with the 25 basis point cut as long as we can maintain quantitative tightening. But I don't think we will, and I think we're going to end that too. Basically, quantitative tightening, unless it's direct QT, which is directly selling their financial assets like bonds and the balance sheet of the Fed, right? And direct QT would be like directly selling those things. What the Fed usually do and what they've been doing for years now is called passive QT, passive quantitative tightening, which means that the Fed it's not directly selling them, but it's letting its current like bond holdings mature and run off its balance sheet, reducing its balance sheet over time in that regard. And again, this ultimately keeps interest rates high. But again, this upcoming Fed meeting next Wednesday is going to be massive. We're going to dissect it here at Beginner Trading like we always do. But it's an important meeting. It's a really important meeting to see where the Fed's planning to go moving forward. Yeah, $45K a year in Texas isn't terrible. But, again, inflation's making it really hard. Is your expectation good for the dollar or bad? I mean, it depends, AK, on what happens. If inflation's high, then the dollar will probably go up. If inflation's low, the dollar will probably go down. All right, guys. Again, NVIDIA up to 108s. We still got 40 minutes left. Let me see. Just got a mortgage at 5.75. Yeah, again, NBA mortgage rate came out today. The average is like 6.37 or something, so it's down. All right, so I'm catching back up. We got a lot of stuff to catch up on. You can get a Lambo for 90 in the 90s for 100K, right? Rates don't need to stay high for disinflation, but it helps, sure. 964 RS was 65K brand new in 1992. Yeah, but that was in 1992. That was freaking 40 years ago. That was 30 something years ago. Stability would come with lots of people. What are the expectations for CPI? 2.6% is what's expected for year over year. 0.2% month to month. I agree with you, John. I don't agree with them doing rate cuts. They should have kept rates higher for longer, but they always make mistakes. We know them. Well, yeah, and it's an election year, and so they're getting pressure to stimulate the economy, right? So during election years, regardless of what they say, there's always pressure to make the economy look good. Mom got a new house for $55K in the 90s. Yeah, it's why I like real estate as a buy. Like, I was talking to some jiu-jitsu friends that I train with, and they were asking me, like, what's the conventional appeal of buying real estate? And I told them, like, this is exactly the math I gave them. And this is what I said. Let's see, let me find it. I said, we had a big conversation about stuff. I said I wouldn't mortgage investments at these current rates. They're just too high right now. But the math goes like this: if the S&P averages about 8% a year, if I buy a $250,000 rental property and I use the 1% rule to charge about $2,500 a month, 2.5K a month, that's about $30K a year in income. If you take 30 to 40% off for taxes and expenses, you're still netting 15 to 20K of cash flow per year, and that's about 8% per year in just cash flow alone, which is similar to what the S&P 500 will give you, right? Then you factor in that properties appreciate on average 3 to 5% in a year, and so you're earning well above what stocks or similar investment returns. You're owning property and building net worth through assets. You can also refinance if you ever need money. So you'll have assets that you can get quick leverage to depending on interest rates. But everybody's different. But it's not passive is the problem, right? So, a lot of people are going to have a better time just buying the S&P because it's much more passive. They don't have to work for it. They can just buy real estate investment trusts if they want. Like, not quite as good returns, but good enough to be passive. And you, like I said, you got to consider that $250,000 home in 10 years is worth about $400K, right? And so, yeah. Over time, real estate prices are going to go up. But again, it's a lot less passive. It's not as passive. It's a lot more work. I'm in Texas, Kurt. So here in Texas, I can find like good fixer-uppers for $250, $300. Yeah. Again, I'm in Texas right now. And so y'all gotta understand here. Like, look, let me give you guys an example. Let me show you guys. Like, understand, guys, I am in Texas right now, okay? This property is $249,000. Look at this property. Like, this is a nice house. 240K. Look at this. 249K. Again, we're in Texas here. Look at that. That's a nice house. You can tell this is a flip. Probably. I don't know how much they bought this for. But, again, under 250. You probably throw an offer there for 230 and get it accepted. So, yeah, nobody knows how the market's going to react to this is the big thing. Yeah, I'm looking at buying townhomes right now. Kirk is what I'm looking at. So I'm probably going to buy a townhome for 250. So that's where I got the 250 number right now. But I would say if you want to buy like a genuinely nice house, $350 is probably what you're going to want to pay. Like in a good neighborhood, that's probably going to appreciate over time, $350. I'm just using that as an example. You will stream the meeting here. So there's no meeting. This is just the CPI inflation report. So this report drops at 8:30 in about 40 minutes. But this is just a report, brother. Yeah. Does it come with squatters? Not here in Texas. Texas has landlord-friendly laws. Honestly, the New York laws are obscenely out of touch with reality. Like, if you look at the laws in New York, man, like literally squatters are just being predatory and they're targeting. Like if you leave your home for over 30 days, it's open for squatters, right? So like you basically you can never leave your house for over a month in some places in New York, or squatters are legally allowed to come in and basically steal your property. And if they stay there long enough, it turns into their property. Just the craziest freaking laws you could ever imagine. I could never imagine buying a property there. And I love New York too. New York is one of the coolest cities in the world. It's the world hub. It really is, and I love New York. But that makes it really sketchy to buy properties in. Yeah. Yeah, nobody knows whether you should buy or sell CPI. Uh, yeah, this property here that I just looked at, it looks to be a brick property. So this is brick. It looks like it's wood and brick. Yeah, so the hurricanes in the Gulf, I don't know how bad it's going to get. Oh, I believe that. There's 2 million in Cali. You know. And again, I have this theory about where I currently live, that over time homes in the current city that I live in, and I don't want to be too specific, but I have this theory that homes here are going to appreciate. If you look at Austin, Texas, right? Austin, Texas house prices have gone crazy. They've skyrocketed. And so people who bought property, 30 years ago in Austin are now doing very, 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 very well, just because of the crazy price spikes. And so I have a theory that the city I currently live in, I'm not sure if it's going to be like Austin, but I think it's one of the more stable places to buy properties. So my plan over time is to acquire properties here, like multiple. If CPI comes in much lower than expectations, 0% month over month, it should be great news for the market, right? You would think so. Generally, it is. But with the rate cuts looming, people might fear they're going to cut rates more aggressively with a 0% CPI reading, right? So people might assume that the Fed is going to be more aggressive with their rate cuts and do something over 25 basis points. And in that regard, it could make the situation a lot worse. Again, I'm a big believer in the least amount of rate cuts as possible. I don't think we need to stimulate the economy in that regard. People are acting like we are just in this big recession, and we're not. Like, you look at the economic reports, you look at the numbers. The numbers, you're going to have good and bad reports. But the problem is that unemployment's at 4.2%. It's still relatively low. Payroll numbers overall are still decent. The labor market's okay. And so I don't think there's some huge, desperate need to cut rates. And the only people that are really pushing that are people who are either directly involved in lending, like real estate agents, mortgage brokers. Of course, they're pushing, we need low rates, because their businesses are struggling because of it. But we can't pander to them, and I think we have to focus on inflation and combating that long term. Make sure prices stabilize, because if not, people lose money to inflation. Again, if we put this up, right, I'll give you guys a graph here. So at the peak of the inflation spikes last year or the year before, inflation got up to 10%. Okay, so just to put this into perspective, right, let's say you have $100,000. And every year you lose 10% to inflation. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. In 10 years, you're going to have $34K in buying power for that $100K today. At that crazy, and now inflation's not going to rise at 10% a year, but even if we do like a conservative average, let's say 5%, that's not really conservative, it's still pretty high, but let's just go with 5%, because sometimes it's higher than that, sometimes it's lower. So we can do the same thing. 100K times 0.95 would be the math. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. You're going to lose 40% of your buying power in 10 years from inflation. Inflation does not benefit any of us, regardless of how strong the economy is. And so, of course, lenders and people directly involved with it want low rates because their businesses do better with low rates, right? But we have to focus on everybody and help everybody. And so it's important for me, at least, for us to really slow inflation. Like, we need it slowed down. And the only way to do that is restrictive. I don't notice it's too crowded. Not more than normal. I used to live in the Houston city. I said 2.5% is my guess, but again, I might be wrong. Nvidia is still battling this previous closing price, so Nvidia is still trying. We got about 1,200 people here live. CPI data. How much time is left? There might be a timer in the top left over there. I'm gonna put it in sub-only mode as well, chat. So if you have not already, hit the subscribe button, hit the notification bell. I appreciate it. Thanks so much. 28 minutes. We need the Goldilocks scenario, maybe. Just right. Yeah, and again, we are an election year, and so if you ask some people, they're going to say, oh, it's the end of the world. The economy is so weak. They're going to say, it's the end of the world, right? Most of them are just getting influenced by, like, election year bias. During election years, one side's going to say it's the greatest it's ever been, and the other side is going to say it's the worst it could ever be. You know, elect our guy. You know? And this is very consistent. The other consistent part, again, is that markets generally do well during election years. And so I'm not saying we're going to do well this year. I think everything is basically up huge. This year alone, here's 2024, the start. And so the SPY, or the S&P, is up from 470s all the way to 550s. Pretty good percentage gain there. How do you get the news so quickly? I don't know. Bullish or bearish on the S&P? I'm neither right now. I'm just waiting for the report to drop. And if we look at the poll numbers here, 51%. We're pretty split down the middle. 50, 50, 50, 51%, 50, 50. How are we 50, 50 every day? Kind of shows you how split everybody is. We got 950 votes. All right, guys. I mean, I got a lot of sources, bro. I'm not going to give up my sources either. Does the anniversary affect markets much? I don't know. Not unless, you know. Yeah, so again, Tesla, I'm looking at Nvidia. Nvidia's at 108.20s. All right, so we still got 25 minutes left, guys. 25 minutes left. Okay, we got about 1,200 people here live. Yeah, I mean, politics, man, it's just, it's one of those things that I try not to get wrapped up in. And I think people get so emotional about it that it just makes them super biased. Like, it's very clear. I don't like to be manipulated, and so I don't like to, I don't root for one side like it's my football team. Like, I just... again, I think that takes up too much time, energy, emotion, like mental capital for me. If CPI comes less, will the market favor it or just crash? I mean, generally lower is better. Generally lower inflation data is better, but not always. So, like, generally low inflation data is good. Higher inflation data is bad. Although lower does signal less economic strength and more economic weakness. Yeah, so it's a massive day, guys. It's a massive day. So Generation Z is drinking less alcohol than any other adult generation. Good for them, man. I mean, I disagree with the new generation some, but I'm an old person, so get off my lawn, you know. But what I do agree with is them not drinking alcohol as much. Alcohol is toxic. And a lot of old people just kind of live their life just drinking. Like, I see parents that literally, like, anytime they go out, they're bringing their kids to, like, sports bars constantly so they can justify, you know, drinking. And it's a nasty addiction, man. I'm not against you if you drink, but, you know. Somebody ate the cat. Yeah. If inflation numbers come in as expected and retail sales fall, could it scare the market? Yeah. Next week we have retail sales coming out. So retail sales drop next week. It could freak the market out. All right, it could. So we got 1,300 people live. All right. Again, we're also supposed to have like a Jensen Huang speech of some sort. Hey, it's my channel's birthday. Shout out to my channel. Thank you guys for the growth over the last few years. I appreciate the love. Thanks so much. Yeah, cuts next week. I think we are going to cut next week. I do think we're going to cut. It's not my birthday. It's my channel's birthday. YouTube just told me this. You know, again, it's not my birthday. Yeah, all right, guys. We got 20 minutes left. CPI inflation. It's a massive, massive report. So you bearish after cuts? I really don't know. Like, when I look at the market, it's so hard to tell. I don't think it's easy to tell right now. I think it depends on what the market does regarding rate cuts. Like, it depends on how the market responds to rate cuts. Thank you, Mike. Hey, thanks, brother. I appreciate it. But yeah, it depends on how the market reacts to rate cuts. If the market panics from rate cuts, it depends on how big the rate cuts are. If the rate cuts are over 50, then the whole market's probably going to panic and the market's going to go down. If we show up at just 25 basis point cut, which I think is pretty probable, I think that's kind of like a neutral reading, and the market might go up or down from it. We don't really know. Again, this is going to be next Wednesday. So next Wednesday's massive, guys. But yeah, thanks again, Mike, for the donation, brother. I appreciate it. Thanks so much. All right, guys. Yeah, election yesterday. There's some hilarious memes, though. All right, guys, so look at NVIDIA spike up. So NVIDIA up to basically 108.50s, 108.50s. Gold is at 25.40s here, chat, 25.40s. We got 1,500 people here live. Yeah, what did I say? Do you mean debate? What did I say? Let me check Discord. I haven't even looked at it. Yeah, Palantir stock is up over the last couple weeks after news that it's getting added to the S&P 500. It's down a little bit today. It's at 34s, but Chairman Peter Thiel is going to sell up to $1 billion of stock. Rest in peace to James Earl Jones, also known as the old man in Sandlot. Rest in peace. Oh, yeah. Oh, yeah, sorry. The debate. Will GameStop recover? I have no idea. I think GameStop has to pivot. GameStop has to pivot. They can't just sit on this current business model and act like everything's fine. That's not the move. It's very clear. Everybody and their grandmother understands that physical copies of video games are not going to be around in a decade. This is obvious. It's so self-evident, and people refuse to look at it objectively. You know, they bring up something like, oh, well, I like to buy old retro games. Cool. But those are old retro games. It's not the same thing. The business is going to slowly decrease and decrease and decrease. GameStop has to pivot. They can't just keep doing what they're doing. It's going to, like, again, GameStop currently has $4.2 billion in cash, right? They have the money to pivot. They've got the investment community support to pivot. But if they sit on this old business model, they're going to fail. So that's my stance on GameStop. And so whether GameStop succeeds, I don't know. It depends on if they can actually pivot or not, or whether they just are so afraid to make a change that they just dwindle into nothing. Yeah, I know he's Darth Vader, but he was also the old man in the Sandlot. Historically, rate cuts were positive for the market except 01 and 07, but with the world situation we're in, I'm not surprised if 2024 is a sell the news event. Sorry, I didn't understand the poll. Isn't it expected at 2.5%? I'm showing 2.6% is what I'm showing. I see core PPI expected at 2.5%. I'm showing CPI data is what I'm looking at. CPI expected at 2.6 is what I'm showing. So I'm going to go with 2.4, 2.5%. Might be 2.4%. But again, we'll see. I'm going to go with slightly under the expected number is basically what I'm thinking. I feel if CPI is good, Wall Street will dump. Those guys are irrational. Yeah, I mean, sometimes. I doubt GameStop will make the same mistake as Blockbuster. Well, if they continue trying to refuse to change and pivot into something else, that's where they're heading. And I don't want it to happen. I hope they do well. Yeah, he was also in Lion King for sure. All right, guys, we got 15 minutes. 15 minutes. What do you think the market needs? Do you think, here's a good question, chat. Here's a good question. Do you think the market has a bullish or bearish reaction for rate cuts, for a 25 basis point cut? If we do 25 basis points next Wednesday, do you think the market goes up or down from that? And again, write bull or bear in chat. Bull or bear in chat, depending on what you think. Do you think 25 basis point cut is a bullish thing or a bearish thing? Bull. Bull, bear. Crab. Bull. Most people think a 25 basis point cut is bullish, which I would say it's more neutral, but yeah, it's possible. I don't know if 25 basis point cut is going to be a bearish thing. The reason I don't know if it's going to be bearish, and it might be, but the argument against that, I think, is that it's overwhelmingly expected. So a bearish outcome, or a 25 basis point cut is what's expected right now. It's the most probable outcome next Wednesday, is a rate cut of 25 basis points. That's the most likely outcome. And so, yeah. Points in that regard, I don't know if we necessarily get bearish action from it. I think if we do 50, that's where the bearish stuff shows up. I think if we do 50 basis points, that's when everybody panics, freaks out, runs. That's my guess. But who knows? Again, hit the subscribe button, guys. Hit the notification bell. I appreciate the love. Thanks so much. Help me break 150,000 in subscribers. We're basically at 146K. Help me grow the channel, guys. Help me hit that 150,000 level, that milestone level, 150K. Do it now. Subscribe. Hit the notification bell. I appreciate it. It's not the cut. Yeah, so what Powell says after the cut is going to influence whether we go up or down 100%. So generally speaking, every CPI report, every FOMC decision, the decision drops at 2 p.m. We're going to live stream everything like we always do. And if you want a one-stop shop where you can watch all this stuff live, completely free, every single time, hit the subscribe button, hit the notification bell. We cover it live every time. We have thousands and thousands of people. Bro, my frustrating thing is, like, they play this song. It's like they play that song, even though it's supposed to be an instrumental. How do you get to 150,000 without getting any alpha? I mean, if you think that I don't give any other, like, listen, I'm not an investment professional. I'm not liable if you lose money. And my channel really is proof that you can literally tell people you have no idea what you're talking about and grow to over 100K on YouTube, right? But to act like I don't ever give any type of edge or anything like that, like, I explain my strategies often, and I think my strategies work very, very well. The other thing is, like, we cover economics here. I'm not claiming to be a good trader, and if you guys want a guru who's going to sell you a course and over promise and under deliver and basically try to sell you on them being some expert, and if you're gullible and susceptible enough to that, go ahead and buy the courses, go ahead and believe the guru. I think a lot of people have confirmation bias where they're desperate to believe it. Riches yell, wealth whispers. Like, people who are actually doing it are usually not super outspoken about it on YouTube. And most of the people that are acting like they're just getting rich trading are not, right? They're marketers, right? And I'm a marketer, to be fair. But we mostly cover economic data. Like, we cover economic data, FOMC meetings, earnings. So we're more like long term. And I am green on this year. I'm up thousands this year. I think at least in unrealized I was up last year as well. But I don't think I actually took profit or unloaded my positions, which most people shouldn't. If you're investing long term, you should sit most of the time. And so, yeah, I mean, but again, I'm not claiming to be the greatest trader of all time. I don't need to. The reason we get thousands of people here is because we cover this data quickly and we cover it reliably. And, I think even the last CPI reports, we've been right in, like, at least 4 out of the last 6 or 7 CPI reports. And so we're over 50% just in straight up guessing what the CPI number is going to show up as. Now, maybe we're not going to get it today. I don't know. And most of the time it's just a straight up guess. But the overarching point is that we provide value. There's a reason thousands of people are here watching right now. And so, yeah. Definitely top 10 most neutral of all time ever in the world. First time in history, CPI data high is good for markets. Recent Fed cut, high rate. If CPI data below or stable, the market goes down. Fed cut, not. The Fed's going to cut rates regardless of, unless CPI spikes up to 4%, Fed's cutting rates. All right, that's number one. Fed is inevitably cutting rates. It doesn't matter. They're going to cut rates. Number two, I still think lower is better, but I think it could be that way as well. I think it could be that way where higher is seen as positive because it means economic growth. But I don't think the economy is super, super weak either, right? I don't think, people acting like the economy is just the worst it's ever been, and that's not true either. It's just an election year, and people are really gullible sometimes into thinking it's the worst it could ever be, because that's what the news is telling you, because it's an election year and their job is to make you think it's the worst it could ever be, so you elect the other guy, right? And their job is to make you think it's the best it's ever been, so you elect their guy, right? It's the nature of politics. But the reality is the truth is somewhere in the middle of all that. I'm not saying things are great. There's definitely problems, but things are not the worst it's ever been either, right? So the truth is somewhere in the middle, and you got to be resilient to that type of sensationalism. All right. CPI year over year expected now 2.5, 2.6. Yeah. That's why I love your streams. No BS, just good info. Hey, thank you, brother. You're live watching double up in 1 year. Last year that was 800, now 1.8K. Yeah, we'll probably have over 3,000 people here for CPI, I'm guessing. Like, we got 8 minutes left. I'm sure we're going to bump up at least over 3 in that period of time. And you're very interactive with chat. Hey, thanks so much. I am a whale with 90K Bitcoins. No, you're not. Yeah, I think that's probably what we're going to do, Faye. Economy is bad. Well, I mean, I'm looking at average numbers. 4.2%, relatively low unemployment. The labor market's still okay. Like, one bad payroll report doesn't mean the economy's in shambles, guys. You got to look at the previous payroll numbers. And again, I'm not saying things are good. The real problem is inflation. Like, inflation has gone up dramatically over the last 5 years, and that's caused a lot of people to be really unhappy today because of the price rises that we've seen. But in general, it's somewhere in the middle. I'm not saying things are good, but they're not like the worst it could ever be either. GDP's at 3%, unemployment's at 4.2%, payroll numbers are decent, and maybe the numbers are off. Like, people are always, but I think nobody cries manipulation more than somebody that's wrong about a prediction. And so, again, maybe the numbers are off. I don't know. I would take everything with a grain of salt, regardless of it, just because they can be off. The numbers can and have been off historically. But, we got 7 minutes, guys. 6 minutes, 6.5 minutes. All right. Be ready here, chat. 6 minutes. We got 2,400 people watching. Also, guys, if you want to learn how to day trade, check out TopStepX. TopStepX is a funded account program in futures. It really is the best edge in funding right now, in my opinion. TopStep gives you a demo, and they test your skill with a demo first. If you pass the test, they fund you. If you fail, you only lose what you pay for it. In this case, it's $49. Most day traders lose, and so if you put up your own 5K, you're probably going to lose that, and it's a much cheaper way to limit your risk. You're risking $49 a month for the base one. They give you a 50K demo. If you can make 3K without losing 2K and following their rules, they fund you. If you fail, you only lose that $50 basically a month. And again, TopStepX, once you're funded, has some of the best rules in the game in funding. There's literally zero commissions, only 74 cents in fees per micro trade, which means that I can take these little small scalps and build up profit, $30, $15, $18, $11, and limit my risk in the futures market. It's a great way to learn how to day trade. And most day traders lose, and this builds your skill, teaches you how to trade under pressure, a lot of good stuff that comes with it. But again, they're a sponsor of mine. They pay me money. I'm biased because of it. Genuinely a good way to learn day trading, though, and it's something I wish I had in the beginning, in all honesty. But again, if you want to check them out, I'll post this link up. You can check them out right here. All right, guys, here we go. We got less than 5 minutes. Here's the link right here in chat. All right, here we go. So core CPI is expected at 3.2% year over year and 0.2% month to month. So both core and regular CPI month to month is expected at 0.2%. Both core and regular CPI month to month, again, expected at 0.2%. Year over year is expected at 2.5% on the year. Core CPI expected year over year at 3.2%. Core excludes food and energy prices, which are very volatile up and down. So core excludes food and energy. So if you want to know the difference between core CPI and regular CPI, again, core CPI excludes food and energy prices. All right, guys, we got 3.5 minutes. Yeah, lower generally means lower inflation, but weaker economy. Higher means higher inflation, but stronger economy. Generally speaking, the market usually wants lower. But again, right now with rate cuts looming, I think it's different. I think anything could happen. And so I think anything could happen, and we'll see. I have $65,000 bet on no cuts in September 18th. That's dumb. You're going to lose 65K. That's stupid. No offense to you, but that's completely stupid. I'm sorry. I usually don't call people just straight up stupid, but like that's the dumbest trade you could ever get involved with, brother. And you're almost certainly going to lose your 65K. Good luck to you, sir. You know the probabilities of that are freaking crazy low. Crazy low. Like there's not even an option on the CME watch tool for no rate cuts. The question is it 25? We've already had PCE, which is the Fed's preferred inflation metric. So if CPI comes in super high, it probably won't even matter because the Fed looks at PCE, which was low last time, meaning more likelihood of a rate cut. Anyways, we got 2.5 minutes. We got 3,000 people here. Yeah, I mean, I got to call a spade a spade. That's dumb. That's just straight up dumb. I'm sorry. I'm being honest. I hope you understand. That's dumb. You're going to lose your money. To put it into perspective, that's like betting on, let me think of a good example. I can't even think of a good example. All right, guys, we got a minute and a half. Give me your best examples. Yeah, I'll try to find the audio. All right, guys, hit the live button next to the play button. We got a minute and a half left. Yeah, they're probably trolling. I think so. So I hope they are, to be honest. No, you need better than 20-1. It's like 100-1 odds that we're not going to cut. Yeah, it's like betting on the Jets to win the Super Bowl, you know. That's like betting on Tony Ferguson to win a fight right now, you know. All right, guys. Yeah, that's like betting on the Detroit Lions. The White Sox, you know. All right, guys, we got 30 seconds left. 30 seconds. All right, guys, here we go. Again, here's the time. It's time. Data's dropping right now. Hit the like button, hit the subscribe button, hit the notification bell. We appreciate the love. Thanks so much. Let's do this. It is time. Again, CPI coming out. Expectations 3.5%. We got 10 seconds, guys. 10 seconds. And 5, 4. This is a little bit off. Okay, so this is a little bit early. It's actually dropping right now in about 1 second. 3, 2, 1, and boom. CPI 0.2%, 2.5% as expected. I got another one right, guys. Another one right. That is my second one in a row, I think. 2.5% CPI year over year, 2.5% year over year CPI. The stock market has dropped originally on this report. Everything was virtually as expected except for core CPI bumping up 0.1% to 0.3% month to month versus 0.2% expected. Core CPI year over year was 3.2% as expected. Regular CPI year over year, again, 2.5%. As I said, I don't know how I keep getting these right. I mean, I'm kind of going with balance predictions, but I got another one right, man. Again, CPI month to month, 0.2%, 0.2%. Bro, how do I do that? It's weird. It's freaking me out. Maybe I should start betting on that. Again, market's down a little bit. This is mostly a neutral reading. The reason the market's down is because core CPI came in at 0.3% versus 0.2% expected. 0.3% 0.3% versus 0.2% expected. So core CPI month to month was a little bit higher than expected, but regular CPI year over year came in at 3.2%, as expected. 2.5% versus 2.6% as expected. So maybe a little bit better than expected. Again, month to month, 0.2%. Core showed up at 0.3%, which is making markets drop. But yeah, that's basically the report. Yeah, the one that came in higher was core. Came in a slightly higher than expected. I'll put this up on screen too, just so people can see all of it. But yeah, market's down a little bit. I might buy the dip. Yeah, it's just weird. To put this into perspective, guys. So just to put this into perspective, right? I have guessed probably out of the last like 6 or 7 CPI reports, I think I've gotten at least 4 or 5 of them right. You know, like exactly right. So that's weird. And then I said today, people asked me, I said 2.5%, and we showed up at 2.5%. It's weird. Like I said, maybe I should start betting on these things, man. The problem is I don't know how the market's going to react even if we show up at 2.5%. And 2.5% is relatively neutral. They expected 2.6. We showed up at 2.5, so slightly better, 0.1% better than expected. But you know, the only thing I can think of when I look at this edge is balance, right? I'm trying to use balance. So I'm trying to look at, like, I think we're going to come in a little bit better than expected, but not much. And so 2.5% is what my guess was. It unrounded to 0.187% for month-to-month CPI. 3 in a row is nuts. Yeah, I got 3 in a row, I'm pretty sure. Which is crazy. Anybody that understands CPI understands like how random these numbers are. Which is weird. Hey, thank you, Daphne. Yeah, the guy that's betting 65K on no rate cut. Yeah. Again, the reason I made fun of him, I'm not making fun of you. I kind of feel bad for calling him stupid. But you got to understand this, okay, guys? Let me put some things into perspective for everybody at home, including 65K bet on no rate cut guy. Here's the problem, okay, is that rate decisions are one of the most predictable economic things in the world. Like, if you look at the CME watch tool, it has been right every single time for years. You know, regardless of if it's right, every single time this happens, some person is coming out betting against the high. Like, you'll see this, it's like 95.5, right? One is 95, the other one's 5, and this is 71.30. But for whatever reason, you got contrarians in chat that somehow bet against the super unlikely outcome. And this is not even super, like, unlikely. This is 30%, so this is not even a good example. But every time they bet against the overwhelmingly expected thing, and every single time they're freaking wrong about it. Every single time they're wrong about it. And so, you know, basically somebody's betting on, there's not even an option for it. There's not even an option down here for no rate cuts. Why? Because we're almost 100% going to cut rates. And again, remember I said this in a week. Remember me saying this. We're almost certainly going to cut rates. I think we're going to do 25 basis points. And I've been right every freaking time for the last year straight. And it's not hard to be right about FOMC decisions. But that's my point, is that if you find yourself betting large sums of money on something that's not even on the board, it might be dumb. It might be dumb. You know, again, Darwinism is all I'll say. Bonds are flying right now. You're doing a good job, John. Hey, thank you so much. John's a time traveler. Honestly, I told you guys about the story. Honestly, I watched the movie Vanilla Sky with my daughter last week, and that movie's still kind of messing with my head. Maybe I'm in a simulation, and maybe everybody else is freaking robots, and maybe that's why I'm here on YouTube anyway. I don't know. But again, I told you guys this story before. My daughter, I was trying to process buying my daughter some minutes on her phone. And every time we'd click process, my daughter would say something like, it's not going to work. And then we'd click it, and it would say, oh, we hit a snag. We can't fulfill what you were wanting. Oh, we hit a snag. We hit a snag. It would keep saying it over and over again. And we tried it like five to 10 times, and it kept saying that. And so I stopped and I said, hey, we're going to be positive. This next time, it's going to work. It's going to work this next time. It's going to go through without a hitch, and everything's going to be fine, and it's going to work as soon as I click this button. And sure enough, I click the button, and boom, it works. You know, my daughter's jaw drops, and she starts freaking out and being like, what the heck? And so it worked. You know, so then afterwards, I noticed this trend where I started to watch baseball games. And every time I'd put a baseball game, an MLB game on, the next person at bat would hit a homer. You know, and it happened like 2 or 3 times in a row to where I started to get weirded out by it. This is a true story. I started to get weirded out by it. I told my wife and daughter one day when we're laying in bed, I'm like, hey, this weird thing happens every time I put on a game. The next person at bat hits a home run. You know, so my wife's like, oh, hey, let's test this out. We put it up on screen. It's an Angels game. Taylor Ward, you know, Angels third baseman is up to bat, right? And so sure enough, the next pitch comes across. He hits a homer over the left field. And Carol and my daughter started freaking out. They're like, what the heck is going on? And we kept recreating it, and eventually it stopped working. But it's freaking weird. Maybe that's what's going on with CPI. Maybe I'm just in tune with the universe, is all I'm saying. Look at gold falling down a little bit, and we did have a small bounce in the SPY. So the SPY came all the way back down to this bottom range and then rebounded completely. We'll see. Basically, I'm one of the top 3 time travelers in the world right now. And, yeah. No, you told me earlier that if inflation data came in much lower than expected, the market would go down. You know, and inflation data basically came in as expected, and it's pretty neutral from this report. Nvidia is actually almost up a little bit from it. Gold is down, but like we're pretty flat from this report. We're down a little bit, but the outcome was essentially neutral. So I don't know if I would call that a win. Maybe, you know, but. So what is your idea of buying the dip if the market reacted negatively? Well, it depends on what you think the market's going to do all day. First move is wrong move situation. Kind of, yeah, I think so. I think 2.5% year over year is good. Getting pretty close to the Fed's 2% target over time, no? Again, so I think it's good. And again, if you haven't already, check out my sponsor. Check out TopStep, funded account program and futures. I'm going to be day trading on there today on TopStep X. We also have an event with Jensen Huang. The NVIDIA CEO was supposed to be speaking at Goldman Sachs' conference today, and so we're going to try to cover it. But again, here's TopStep X. And again, like I said, this is literally the best edge in funding right now. The amount of edge you get, like, again, if you try to trade regular NASDAQ contracts, the NASDAQ can go up or down. One contract you can lose thousands of dollars in minutes or seconds, really, if you buy the NASDAQ. And so you can literally get 10x the size in micros. And usually the problem with that is that commissions are obscene. Like you're building up, you're trading small, so commissions are obscene. The powerful thing about TopStep X is that there's no commissions. The fees are only 74 cents a trade. And so again, if you look at my like trading yesterday, and yesterday we had a green day, $4. We still profited on the trade. $12, $4, $15, $3, $11, $18, $15, $3, $32. And we're slowly building up small like profits in the way I trade, and it just lets my edge be really, really pronounced. And again, on TopStep, they give you a demo and they test your skill. It's very similar to day trading stocks. There's no PDT in futures. And it's just the best way for new day traders to learn, in my personal subjective biased opinion. Day traders lose. I lost $5,000 when I first got started, or more, really. And again, I think that's going to happen to most day traders. Every trader thinks they're going to be some savant, guru, you know, prodigy, and they're going to take $500 and turn it into 10 million or whatever. Day trading, it's mostly marketing. I'm here to tell you that's probably not happening. You're going to lose money most likely. And so instead of risking your own thousands of dollars trying to look cool on the internet, try a funded account program. It's $49. If you pass it, you get $50K in funding. You got to make $3K without losing $2K. So it's a 2 to 3 ratio, a reasonable ratio. And they have some of the best rules in the game in funding. There's no trailing drawdown from my understanding, and there's no commission on TopStep X. It's literally the biggest edge in funding right now. If you want to check it out, again, they're a sponsor of mine. They pay me money. I am biased for sure because of it. And we are going to day trade later on today. But again, I'll put this link up. You can check them out. Great way to help support your boy here in this channel. Insider trading? Yeah, like I got connects in the economy. I wish. You know, Jensen Huang is supposed to speak at 9:20 market time. I'm here to tell you, I'm definitely one of the top 3 time travelers of all time, but I've never traveled through time ever in the world, except for forward in time, you know. Who wins, O'Malley or Marab? I think Marab wins. You do live trading every day? Yes, sir. Or ma'am, you know. Yeah, but most day traders lose money. And the real problem is that they don't have any risk management. And so these funded account programs literally build risk management skills, in my opinion. You learn how to trade under pressure. You're not taking the massive thousands plus dollars in risk that a lot of new traders do. You're only risking small amounts. If you want more funding, you can get up to 150K. It's $150 a month. And then once you're funded, you know, you don't have to pay it anymore, you know. There's an activation fee once you're funded and some cool stuff, but it's a 90% split once you're funded, and so it's just useful. It's powerful. It really allows you to limit your risk, learn how to trade. If you're good enough to pass it, great, you get funding, and then if you're good enough, you can build up profit, withdraw it, fund your own account. But if you're not good enough, which is going to be most day traders lose, then you only lose the subscription fee, which is a powerful thing because most day traders lose. I was there. Again, I thought I was going to be some savant. I went and saw the movie The Big Short. I was always a poker player. And, you know, poker is very similar to trading. I saw the movie The Big Short. I came home. I researched penny stocks. Tim Sykes popped up. Penny stock day trading nonsense. And I thought I was just going to get rich. And, of course, I ended up losing thousands of dollars. I never paid for a course, though. I was never one to spend money on courses because this is the internet, you know. And you might be able to Google and find some of the courses for free somewhere. I would never recommend that you Google and find a lot of these gurus. Courses out there on the internet somewhere for free, you know, easily findable. I would never tell you guys to do that. But I'm definitely not about to pay for a guru's course with that said. So, yeah. Anyways, Tesla down to 224s. Does it have a trailing drawdown? Like I said, I might be wrong there. I'll have to check. Let me see. Okay, so yeah, I'm about to be wrong about the trailing drawdown. It's calculated from your account balance high at the end of the day. Okay, so yeah. But I think once you're funded, it goes away to a certain extent, I think. But I might be wrong. Yeah, so the good thing about this one is that it only happens after the close of the day. Yeah, so I'll have to keep looking up this. But yeah, so the SPY is down slightly. I don't know if it's a buy the dip scenario. Yeah, so the account balance high and the maximum drawdown is the maximum loss limit. The good thing about Top Step, though, is that there's no commissions, right? So once you're funded, you can build up profit and trade small, like thousands of dollars in drawdown. You shouldn't come anywhere close to that if you're using good risk management, especially with micros. Why do we need rate cuts? Inflation is gone. I don't think we need rate cuts. So I was making fun of the guy who bet all his money on, or bet some of his money on, no rate cuts next week. But again, I kind of agree that we shouldn't cut rates. But just because I want it to happen doesn't mean it's going to. Yeah, so there's no intraday trailing drawdown is what I meant to say most of this time, right? Yeah. No, this is a very small drop, to be honest, right? This isn't some massive bear move. This is a very small drop. Yeah, so I'm trying to find this. So apparently we're supposed to have a Jensen Huang speech. I'm trying to figure out where to find it. Here, bear with me, guys. I'm gonna mute the background music so I can listen to something, so I can see if I can figure out. I'll stream the speech if I can. So again, NVIDIA CEO is speaking today. CEO is speaking today. He's going to speak at the Goldman Sachs Communicopia Conference, 10:20 a.m. Eastern Time. Investors looking for more details around cost. Yeah, so again, this is called the Goldman Sachs Communicopia. Yeah. So again, I found it. So I did find the yeah, so I did found it. I found the speech and everything for Goldman Sachs. And again, we will stream the whole thing live. So we did find it. So yeah, so basically it's at 10:20 Eastern Time. So it's in like an hour and a half. So we still got time. Basically, we still got time. No, it's not swing trading, it's just day trading. Why do we need rate cuts? Inflation is gone. Right. So again, a lot of people don't seem to understand economics in this regard. Okay, so let me give you guys a little bit of understanding about economics 101. All right, so again, stick around. I'll teach you economics here on this channel. Right, I'll teach you economics. Wait, what happened to my epic pen? Oh, there it is. Okay, so let me see if I can. Okay, so I think you guys could see this, right? So let's say this is inflation. As inflation goes up, okay, what does this mean? Okay, this means that too much spending has occurred. And let me make sure you guys can see this. So could y'all see that I just drew? The blackboard that I just drew, could y'all see that? I just want to make sure y'all could actually see it before I get into this example. Yeah, it's at 10:20 Eastern Standard Time. And again, we're going to stream the whole thing live, so stick around. Yes? Okay, good. All right, so I'm going to do a blackboard. So as inflation rises, okay, what does this mean? This means the economy heats up. More spending has happened, because when more spending happens, if you sell bubblegum and your bubblegum is sold out every day, what are you going to do? You're probably going to bump prices up. Businesses raise prices as more spending occurs, okay? And so generally, what contributes to more spending? Lower interest rates. So lower interest rates causes spending to happen, which means lower interest rates equals inflation. Okay, so low interest rates equals inflation. And so, but economic strength, it means a strong economy, but more inflation problems. So a strong economy and inflation go parallel with each other. They go hand in hand. The stronger the economy is, the more people spend, the higher inflation gets. And so if the Federal Reserve fears inflation, what are they going to do? Right? They're going to raise interest rates. Why do they raise interest rates in that situation? They want interest rates to go up. Why? Because when you raise interest rates, inflation goes down. You know, why does inflation go down when interest rates go up? Inflation goes down when interest rates go up because interest rates going higher means what? It means less people have access to lending, less people have cheap access to money. And so when people are paying more money in mortgages, when they're paying more money in auto loans, when they have less cheap access to money through higher interest rates, which means interest rates are high, they have less access to it, they spend less. If you're paying more money in a mortgage, you're going to have less money to spend. And so basically the higher rates are, the less people spend and the more it combats inflation. You know, and that's kind of how it's been. After 2020, the Federal Reserve brought interest rates down to almost zero. They also printed a ton of money through economic stimulus. They also did quantitative easing, which means that they printed money, created bank reserves, and then injected liquidity in those markets and brought interest rates down even more. So they brought interest rates down to almost zero to save us from the pandemic. But the consequence in the following years was massive inflation spikes up to almost 10%. And that's not sustainable. And so then the Fed said, hey, oh no, inflation's spiking up. What do we do? Right? So the Fed said, oh no, what do we do? And what the Fed did in return was they raised interest rates. They did a bunch of rate hikes. By raising interest rates, you're discouraging spending and combating inflation, but it's weakening the economy. And so we've been maintaining high interest rates. We raised rates really aggressively. The federal funds rate is what we're talking about. And we've been maintaining, basically pausing rates at these high levels for the last year straight. Now, it's kind of like picking up pennies in front of a train track. The longer you do it, the more likely you are to get economic weaknesses that push us into a recession and depressions. And again, recessions and depressions help inflation go down, right? It's the only time that inflation literally goes down, which means that it actually goes down and not just slows down. But the Fed's goal is to slow it down to 2% growth, only rising 2% on the year. So again, right now we've been pausing rates. The next meeting next Wednesday is when the Federal Reserve is finally going to cut rates, most likely at least very likely, is when the Fed's finally going to cut rates. And again, this is a super polarizing thing, and a little bit controversial because again, some people don't want rates to be cut. I don't personally think we should cut rates. It's going to do the least to combat inflation. So it's an important meeting next Wednesday, and we'll cover it all. I'll be right back. I hope that makes sense. Let me know any questions you have in chat. All right, sorry. I was telling my son goodbye. My son's going for school. Anyways, I'm back. And again, there's the market bouncing back up. Market's pretty flat right now relative to the CPI report. It's pretty neutral. Again, next Wednesday is when the Fed is going to cut rates. But again, I guess going back to the original point of this, right, is that somebody's saying, hey, why should we cut rates? Inflation is under control. Again, what they're not understanding about economics is the reason you cut rates. The only way you should cut rates is if inflation is under control. If inflation is under control, you have less of a need to keep high interest rates environments, which is, again, discouraging spending, right? You don't need to push spending down if inflation's in a reasonable level, and you can then focus on stimulating the economy and bringing interest rates back down for everybody else, right? But neither one of them is sustainable long term. You can't just maintain, like if you talk to lenders and mortgage brokers and real estate agents, they're going to push like we always need low rates because their business benefits from it. When rates are at 2%, 2.5%, they're making a lot of money in business, and when rates are not, they're not making a lot of money and they're struggling. But we can't pander to them. And I think like it's not always good to have a low interest rate environment, especially in a period of time where, you know, inflation. If we look at an actual inflation graph, you'll see a couple things, and I bring this up pretty regularly, right? Here's an actual inflation graph. The only 2 points in time over the last 20 plus years that inflation literally went down was during the recession of 2008 and here, which I wouldn't even call this. We basically were under zero for a very small amount of time. The only time that inflation has literally gone down, meaning it's actually reduced, was the recession of 2008. So the only time you'll actually get inflation to really go down is during recessions and depressions. The best we can do is slow it down, which is here, which means that we're slowing the growth from almost 10%, which again, you can kind of see 2020 happened. We brought rates to almost zero. We did QE here. And the consequence of QE was inflation, was a stronger economy saving us from the pandemic in that regard, but inflation spiking up, right? And then the Fed pivoted to the other end where they said, okay, inflation spiking, let's have a hawkish monetary policy, a restrictive monetary policy. Let's bring interest rates higher and discourage spending. And so they did, and they did QT, which is the opposite of QE. And then what happened is inflation slowed. It didn't go down, but it slowed down. So that's economics, if that makes sense. I hope it all makes sense. SPY starting to bounce back. Yeah, I think the Dixie, I don't know if the Dixie's going to be up or down from this report. It's up, which I guess is probably because inflation was as expected, maybe a little bit higher than expected for core. Nvidia shooting up as well at 109. So the SPY starting to bounce back too. But how are people spending more? Well, they're not spending more. They're spending less than they were in 2020. Like, you have to take yourself back to that point in time, that moment of time in 2020. In 2020, again, I say this every day, but like Rolex prices doubled. Like luxury prices doubled. You know, why? Because everybody got stimulus checks. So people would take those stimulus checks and buy, you know, kind of dumb stuff with them, like Rolexes. But basically, those stimulus checks essentially caused inflation as well, right? Because everybody had more money to spend, and when people spend more money, what happens? Businesses raise prices. It's supply and demand. It's business. Generally speaking, a rate cut means a bullish stock market. Not necessarily. Usually, yes, but it can also signal things are breaking. Is Nvidia up because of inflation data? No, I think Nvidia is just down a lot over the last few months, or the last few weeks, and so it's probably just rebounding back from it. But it's probably a little bit affected by CPI. No, right now it's 8 o'clock in Texas, 9 a.m. It's 9 a.m. Eastern time, but it's 8 o'clock here in Texas on my end. All right, guys. So yeah, the freaking election, man. All right, Chad. Again, I'm sitting here waiting. We'll see what we get. Hopefully, we get good stuff from Jensen Huang as well. Wait, why does Ryan Cohen have a different picture up on his Twitter, on his X? Why?
Huh.
All right, guys. So Tony Ferguson versus Nick Diaz. Palantir seems dropping. Oh, I think we still got time. Jensen Wong is speaking at 9:20 my time, 10:20 Eastern. Nvidia almost up to 110s, which is good, man. That'll be the first time it hit over 110 in a minute. Tesla almost green on the day as well. The dollar index is falling some. Yeah. X seems to yeah. Yeah, like I said, X seems to be kind of like yeah, I don't know. Bull trap. Yeah, honestly, the SPY very green. I'm gonna start day trading today, guys. So again, we're gonna be day trading on Top Step X, the platform with no commissions, which I'm honestly super pumped about. I'm probably gonna short this. I think we're up a lot. We're right at the previous closing price. We're gonna try to build up a little bit of profit here, and we got 2 contracts. I'm gonna take one more add to this, fix my position. We're flat. Go. All right, we took half off. Took another piece off. We'll add it back. We're kind of flat on the position now. The problem is Nvidia still churns up here. And I don't want to get stuck in this, so we're going to cut it. So we're down. We ended up losing a little bit on that trade, but not a lot. Yeah, we lost like 20 bucks or something. I still think it's probably a... I'm going to jump right back in here. Oh my gosh, I accidentally cut the trade. I didn't want to cut the trade, dude. I got to get better at managing. I've done this multiple times now. It's all right. What a flush. Down. No, we took half off, locked it in. Kind of flat on the day now. Hey, is my mic static? Sorry, guys. All right, so we locked in some more. All right, so we're out. So we just scalped a little bit more back. We're basically flat on the day. What do you think about the yield curve uninverting after being inverted for 700 plus days? You know, I think, you know, we had the SOM indicator as well. There's some recession signs looming for sure. But we'll see what it looks like. Again, we'll see what it looks like. Again, I think a lot of people are saying that it's not going to happen, but who knows? They might just be saying that. All right, so we did catch the top a little bit here. Trying to see where I started the day. So $4.20. So we're basically completely flat on the day. I'm gonna short this. I I know it's kind of like contrarian to bet against the rise, but I think inflation data was basically flat. And I don't mind scalping a little bit here. We're green in this account. We're up like nicely in it. I'm trying to build up a small cushion in this first. I took a little bit off. All right, so we just scalped a little bit more. Small profit. We were correct about this downward pressure. Yeah, my problem with this, dude, is like everybody's so biased politically in both sides, man. It's just too much. I just can't, you know. Yeah, I mean, I think Melvin is a beautiful example of the Dunning-Kruger effect here. So look at Melvin right now. Completely flat on the day, buddy. The market hasn't even opened. What are you yapping about? What I'm yapping about, sir, that you seem to lack a lot of understanding on, brother, is that the stock market is not only open during regular market hours, brother. I'm going to educate you about some stuff. It's not open just on regular market hours. It's called pre-market. So really, the market starts to open at 3:30 in the morning. You know, and again, it seems like you misunderstand this. And so when I say the market is completely flat on the day, that's because it's been open since 3:30. It doesn't open at 9:30. And again, when I say completely flat, that's because it is. If you look at this light blue line right here, we can use this as an educational moment. This light blue line is the previous closing price, which is the complete neutral level, flat level. This level is where if the stock is around this, that means it's flat. That means it hasn't moved up or down very much. You can see we did downtrend for a little while, and then we rebounded back, and now the SPY is basically completely flat. It's going sideways. It's right at this previous closing price, which is where it closed yesterday. And so again, man, sometimes the most critical people have the least understanding about markets. And again, research the Dunning-Kruger. There's a good, you know. Yeah, you're welcome, kind sir. You should feel bad. Okay. You're welcome. All right. I'm going to start charging you for this, Melvin. Now sit in the corner and think about what you've done. All right. No, you can trade. Look, I can buy stuff right now if I want on the SPY. You can trade. You can also trade futures. Which, you know, again, I have traded futures. Look at these trades. So. Like I said, you ever see somebody in chat? Like, here's a great understanding. The stock market has so much ego floating around. But one thing I always tell people is, like, profitable traders don't behave in these specific ways, right? They don't harass people online. Almost ever. They're okay with being wrong. I certainly am one of the top 3 most wrong traders of all time ever. I'm not even claiming to be profitable. But But again, there's just certain things that they don't do. And what was his name? Melvin? Yeah, Melvin is a good example of what profitable traders don't do. That's usually what like rookie. Most of the time they're just young, inexperienced, and don't know any better, and they think they've got something, and it's all love. Yeah, you can trade futures. Yeah, you can trade it pre-market. You just gotta use limit orders. Yeah, we're talking about the stock market specifically. Yeah, a lot of crickets in here all of a sudden, huh? All right, guys. Tesla actually down a little bit on the day. Nvidia is what's leading the market, though. Nvidia pumping up in pre-market already. So Nvidia is up, a decent little percentage here in pre-market. It's up like, what was this? Yeah, so Nvidia is up a couple percent already this morning. When is Powell speaking? Next Wednesday. Yeah, and what I meant by the Dunning-Kruger effect, which we do mention a lot here on this channel because there's so much of it in stocks, bro. You get every like 15-year-old with braces wants to pretend to be like every 20-year-old with braces that has no idea about stocks wants to pretend to be some stock market expert. I think like the culture of the world has been influenced by like finance bros, and you see it a lot, but the problem is that sometimes the loudest is the weakest, like sometimes the loudest person in the room is the weakest, so you see it a lot with stocks, you see it a lot with stocks. All right, SPY just went back red on the day slightly red. You can see this big dip under the previous close on the SPY. SPY is still close enough. It's like $15 away from the lifetime highs. Yeah. All right, guys, we're going to day trade 15 minutes. But yeah, what the Dunning-Kruger effect, just to define it, so the Dunning-Kruger effect means people who know the least know so little they think they know a lot, right? They think they know a bunch, right? People that are truly experienced in something can recognize how little they know. So usually the loudest person in the chat, the most critical person who's telling everybody they're wrong and they're right, and their strategy is the only way. Like, experienced people understand there's a lot of different ways to trade. You can trade high time frames, low time frames, all these different things profitably. But just because somebody doesn't trade like me doesn't mean they're wrong. And just because I don't trade like you doesn't mean I'm wrong. Rookie traders will see only their way is the right way because they're just so little experienced that they don't understand all the different ways. And so they think that if they have a way, which a lot of the time what ends up happening is that people are just adding to losses. So it's kind of the martingale roulette strategy played out over and over again. And I talk about this because this is important for traders to hear, right? Because I know there's some traders in chat that might be doing this exact thing and they think they're profitable. And a lot of the time, these are the guys that are the loud ones in chat, right? I had a guy who basically, again, he used to just gamble on earnings, and he would take larger and larger size, and so he would end up net green sometimes, but he was taking massive amounts of risk in his account, and obviously it wasn't sustainable. But when he saw me make $100 or $200, he got kind of critical on me about it, and kind of made fun of me for making $100 or $200, right? Because he thinks he's making all these big money, right? And then within a couple weeks, everything was gone, and he basically gave up trading. And that's a good example of like what happens in the stock market, where you get these people who are just taking massive risks, right? Like the martingale roulette strategy. If you double your size every single bet in roulette, you have to lose 6 times in a row before you'll actually lose. So you bet $10, you lose. You bet 20, you lose. You bet 40, you lose. You bet 80, you lose. So forth and so on, to where you're going to have pretty low percentage chance to lose in that situation. But the problem is that you might look at 6 losses in a row and think that's never going to happen. That's very statistically possible, right? So eventually it will happen. And when you lose, you're going to lose way more than you would ever win in that system. As well as the fact that like the roulette tables make it so that it's less than 50-50 because they have the green section in roulette. And so it doesn't work, right? And a lot of traders do the exact same thing where traders will, they'll buy a position and they'll lose. And then they add more to it and then they lose. And then they add more to it and then it finally rebounds and they win. Right? And they might do this over and over again for like 2, 3, 4 times in a row and make big percentage returns and be like, oh man, I've got this super dope winning system. The system's making me all this money, guys. Look at me. And they might look at other traders who are making less than them and they might look down on those other traders, right? But the reality is they're doing the martingale. Like eventually the check's going to come for that system. And eventually your whole account's going bye-bye. Like the whole thing's gone. And again, you just think you're profitable when really you're just kind of doubling down until you win. And again, a lot of traders do that. A lot of traders do it. And to a certain extent, I think it's okay to do it if you have the profit in your account to justify it. So if you build up $500 in profit in other ways, and then you want to have a big run up in your account, then you might be able to add to losing positions and make some money with some risk like setting, some a little bit higher risk tolerance because you have $500 in cushion. So if you lose, you're back to break even anyway. That's okay if you want to try to swing big and do some things. Like I'm not going to say you can never use that type of system, but again, a lot of traders just don't understand, and then they keep adding to positions, and eventually they win. And then one time the stock just doesn't rebound. At one time the stock just keeps on a dropping. It just keeps on a dropping, and what happens is their whole account goes away. And then they thought they were some super profitable 90% accuracy trader. And they find out like, hey, that wasn't actually profitable. It's all in their head. And I see it a lot. I've done it before. So the data's already out. So CPI inflation data is already out, brother. That is called the martingale strategy. Three green arrows, yeah, they're taking all the edge away. Well, yeah, it was originally a casino strategy, Max. Honestly, a lot of them won't even let you do it, right? So a lot of them won't let you make more than like X amount of consecutive losing bets in a row. So if you lose once, you lose twice, they're not going to let you bet again. They'll restrict you from doing it because they understand, like, even though you're statistically likely to lose eventually, they still don't want you to make money until then and then go to another casino and lose. Are you done spitting facts yet? We try. Yeah, you don't do it with Forex either. Hey, thanks, man. Yeah, there's gold. Gold's down on the day, starting to bounce back though with the rest of the market. AMD, we're at 146. AMD's pumping up, man. I didn't even see it. This is kind of helping the market. Yeah, Yeah, why is AMD up, guys? Does anybody know? Yeah, I guess it's just following NVIDIA, but I don't see any other AMD. AMD gaining favor in NVIDIA dominating market for AI chips. Do 90% of people lose money in stocks? No. It's not 90% of people lose money in stocks. 90% of day traders lose. Most people make money in stocks, I would say, if they're investing. If you're investing, most people make money investing. As long as you're not investing in penny stocks or mid caps. If you invest in blue chip healthy companies and you sit or index funds, you're going to make money long term, most likely. If you're trying to buy up penny stocks because somehow you got talked into, oh, they're cheap, I can find good value at $1.50 a share, you know, you're usually somewhere you're misled into nonsense. Most successful companies are never penny stocks. They're never under $5. Really, they're almost never under $5. You know, most successful companies nowadays were never under $5. Yeah, and people might look at history and see some of those low prices, but most of the time that has to do with like splits affecting historical data. So, you know, like Nvidia was $1,000 a share. They did a split, but if I look back at Nvidia's price, it shows, you know, it shows Nvidia really at you know, $3 back in 2018, but really that was $30 because it did a 10-to-1 split. And so again, like investing in penny stocks is a sucker's bet. It's a rookie mistake, and you know, almost all of them will fail. So it's just not profitable. Yeah, if you want to check out Top Step, there's the link. All right, guys, we got 7 minutes left. 7 minutes left. But yeah, check out Top Step. Again, I've been day trading on there today. I'm going to sell this. I'm going to short. You can see I'm day trading the micro contracts. So this is a very small position. And so I can day trade this, no PDT rule. It's very similar to day trading stocks. There's no PDT restrictions in futures. I can day trade short. I'm shorting basically the QQQ price action in futures. And again, there's no PDT rule. There's 0 commissions on Top Step X. It's literally the biggest edge in funding in my opinion right now. So again, we're short 3 contracts. We're probably up a slight amount on the day right now, as long as this doesn't rip up. A big pop up and then a huge retracement. Look at that. That's weird. Look at the swings here in this candle. I'm in a position. I'm going to cut it. This is too big of swings for me. We're kind of flat on the day. But again, I can day trade small size here on Top Step, and it's the biggest edge in funding. I'm actually green on this account. I can day trade these small sizes with no commissions, basically only a small amount of fees per trade. There's 74 cents a trade with micros. Crazy edge, to be honest. And again, if you want to check it out, there's the link in the chat. And somehow I turned around on this trade and I made money. I'm going to add to it. A lot of swings though here for sure. All right, so yeah, we just made like 30 bucks here. Somehow I made money on that trade. Short in the top, big rejection. But again, this is, like I said, biggest edge in funding in my opinion. They're a sponsor of mine. They pay me money. I'm biased because of it. You know, I'm not going to guarantee anything. I'm not even going to claim to be profitable. I'm not claiming anything at all. Not an investment professional. Understand CFTC 4.41. Hypothetical or simulated performance have limitations. I do trade off stream. You're not going to see all my trades. I'm definitely one of the top 3 worst traders of all time ever in the world right now. A lot of choppiness. I mean, I'm not going to... It depends on how much money you have, Martinez, to be honest. Let me see how much I'm up today. I know I'm up something. Yeah, we're up a little bit. We're green in the account, too. A lot of choppiness leading into the opening bell. We got 3.5 minutes left. CPI was, it might be in big, bold. It was 2.5%. Yeah, I never understood buying rugs. Like, you know the people who spend so much money on rugs? Like, I never understood it. Like, I've got family that do it. And maybe they know something I different. I think they might, like, keep up with inflation. But, like, you know, some people buy rugs and they're like freaking 10K a rug. Like, why? Like, I would imagine even, unless I was like a billionaire, it just seems like a waste of money, you know? But again, I might just not understand it. Maybe there's an aspect of it that I just don't understand. That's definitely possible. I just use newspaper. I'm not saying a couple $100 is bad. I'm talking about people that drop a lot on rugs. I just never understood it. Unless you got FU money. FU money's different. All right, guys. We are here today. It is... Just like parents you don't understand, get off my lawn, okay? Alright, guys, so we are dipping down a little bit. The SPY's about to hit the previous close, so I might kind of pivot to a long base strategy. The only problem is we're about to open up in 1 minute. 1 minute left until market opens, guys. We still got 1,000 people here. Alright, here's the opening bell, guys. Pretty soon. When is CPI? It was about an hour ago. Well, celebrity rugs is different, I guess, but again, it depends on what kind of. I don't know if rugs can be like investments, like kind of like watches, right? Like you could buy like if you buy a Rolex, chances are you could buy a Rolex, wear it for 10 years, and then sell it for noticeably worse than you bought it for, right? And a lot of people don't understand that. And so when people see somebody buying a Rolex, they don't understand. They think they're flushing money down the toilet. Realistically, Rolexes perform very well. Rolex prices in the last 7 years are up 70%. They trend similar to the S&P 500, you know. And you get to wear a cool watch, you know. So like that's the argument for buying watches. Honestly, I like investments. Watches right now are pulling back. And so it might be time to get in on those now anyway. NVIDIA spiking up at the opening bell. I'm going to buy this. This is a super risky trade. I'm going to cut it. So we just bought it. I saw NVIDIA pump up and I saw the SPY dip. So another little trade here. But the point is, I guess there's a lot of investments that I just don't understand. And maybe rugs are one of them. You know, I know some people that bought some good rugs. I'll have to ask them. Why not, Alden? I mean, if you're worried about messing it up, I don't mean like regularly. I don't mean daily. I mean like if you go to a nice event, you know, you can have one to wear. All right, so Tesla falling at 223s. Tesla's down big. NVIDIA's churning down. Yeah. AMD bouncing up a little bit. Look at Nvidia. Nvidia over 110s. AMD up there. SPY's falling though. Yeah, so the SPY's falling down some. Well, yeah, I'm not talking about daily. I just mean like a good watch. All right, so we basically rebounded a lot of the opening downfall here. Part of me is short bias here, but I got to wait and let things tune up a little bit first. Hey, Nvidia looks pretty strong. All right, so I'm short. All right, so we just made another $20+ here. We've been pretty accurate. And again, this is the power of Top Step X. Like, look at my trades. So, $4, $4, $15, $4 loss, $1.50, 12, 50 cents, $9, $2, $14 profit, $7, $12, $21. So we're keeping most of our profit. All right, so we just made another little gain from it. Slow grind up here. I don't know, man. I'm surprised Intel hasn't rebounded back, to be honest. And so that has me, again, I ended up cutting it because it's a greater concern for me. You know, I bought Intel on the big pullbacks that it made, but it just kept dropping. So I got to cut it eventually. Eventually, you have to rate. Like, you can buy dips like I do, but the whole thing about it is that you have to recognize when risk picks up. And I think in Intel, risk has picked up. It's much sketchier to buy it now than it was. The deeper it falls like that, the more I'm get concerned about it. So it just fell too quickly. I stopped trying to play it. Huang is speaking at 10, or Jensen is speaking at 10:20 market time. Tesla's still falling down, breaking lows is at 221. Look at the SPY fall. What a candle here. Look at that. Such a big range here, man. Yeah, I ended up cutting it before it dropped, so, man, I avoided a loss there somehow. Like, I'm a kind of like a contrarian trader is what I would call myself. Big drops in the SPY and everything else, too. Alright, so we just made some more. Man, look at the string of good trades I've gotten in here. Look at that. Look at that. 1, 2, 3, 4, 5, 6, 7, 8 green trades in a row today. Still gonna be sitting back waiting. Man, what a drop. I don't want to lose my string of trades, so I'm trying to wait for the best trade I can get in. Problem is Nvidia's starting to run back. Look at it. Nvidia tested highs almost up to 111s. Sorry for the holiday music. Let me get rid of this. Sorry, I want to see how much I'm up. Okay, we're doing pretty good on the day. All right. We're starting to rebound back a little bit. I'm waiting here, guys. Yeah, I'm sitting tight waiting. All right, so we got a little bit of rebound here. So again, I kind of slowed down. I'm waiting here. Let me find AI. I had AI up somewhere. All right, what a big rebound. I'm going to short this now. Alright, so we just made some more money, another green trade in a row. Nvidia's breaking highs. That's the reason I wanted to cut this. I thought I had Chat GPT up somewhere. Not there. Maybe here. No, that's not it. No, that's not it either. Nope, that's not it. Alright, so we did get a big downward pressure move here. CPI graph. I guess I don't have it up. All right, look at this big downward pressure here. All right, chat. All right, so again, we are down. We got this big down wick here. I like shorting into this though. All right, so we still got out green, but we're up about $100 on the day. I'm gonna short this too. We've built up a cushion that we could probably use on the day, but they gave me my first loss of the day, even though I was kind of in profit when I took the L off here. Man, what a big squeeze back. We're kind of choppy right now. I don't know if I want to add to this. I don't think I do. I'm going to have to cut it. I tried to click it and I didn't get out, so we just lost 40 bucks. A little disappointing. But honestly, man, the market's so like sideways and back and forth here. I think I need to increase size. A lot of indecision right now, man. And we're green on the day still, but not as green as we were. Hard to spot like an edge right now. Man, the whole day is undecisive. Maybe the market's waiting for Jensen, and Nvidia's shooting up. Like, I want to take profit, but I don't even have time to take profit. Like, it doesn't stay down long enough to. Oh, man. All right. Well. I mean, we got out, but man. MicroStrategy is down 6%, is it really? Wow, look at this drop, man. SPY just dumped under lows. Wow. A lot of chop happening over the last couple minutes. Bank of England is going to hold rate at 5% on September 19th, said all 65 economists. 49 out of 65 said they're going to cut 25 basis point once more this year. All right, so we're going to try to take some swings now. We got a cushion on the day. I got to take swings eventually, and I think now's the time. There we go. All right, so we just made all of our money back, basically, that we lost. So we're back to where we were a couple trades ago, so that's good. Get up about 100 on the day. Attack and choppiness is what I've been kind of pivoting to today. So I'm trying to find this conference. It's the Communicopia. Sideways action here today, chat. All right, so we're back down to the bottom range here. I'm gonna buy this dip. So we get something here. We're trading very small today because we only have really choppy action. And I'll add towards the bottom of the dip too. I just hope that we hold. All right, so we're going to add into this 2 contracts. Kind of a risky position here. And oof. Terrible decision for me there. Just basically gave all my profit. We're still kind of flat on the day. But I could kind of feel it when it was coming. And again, I'm still green in this account. But man, what a drop. We'll see if we can win some of it back. I'm just glad I wasn't trading like regular micros. Alright, so we made some back just now. And we cut it right before that big drop. We'll add to this again to see if we can catch a rebound bounce up here. Take our swing. There we go. Alright, so we just made about $100 back, or maybe a little bit less than that. So we did catch it back, but I had to take some risks to do it. Let me see what I'm up. I don't know if I'm up or down on the day. I am flat on the day. Better than not. I made the money back on the dip. You know, I was hoping we would get choppiness, but you know, again, we're getting kind of mixed trends and everything. Do you think the debate's having an effect on markets today? Not necessarily. I think maybe. Let me ask Pawn something. So we did rebound all the way. Was the data good? The data was flat. Again, what I'm still surprised about is this is like my 3rd CPI report in a row I got exactly right. And it, you know, again, and really, to be honest, I felt like I was just guessing. But looking back on it in hindsight, I'm going to give myself a little bit of credit. I think that I use balance as a key factor in the edge there. And I think so. I do think there might be some edge doing it. All right, so again, we got Jensen Huang and the Communicopia. Let me make sure. All right. So it is a Goldman Sachs event today. So yeah, NVIDIA is going to present at 7:20 Pacific time, which is 10:20 Eastern time. Okay. Trying to see if I get a timeline. Okay. All right, so again, so NVIDIA Let me make sure. Yeah, so Nvidia's speaking at Communicopia. I might have this wrong. Make sure I got our Communicopia. All right, guys. So sorry, I got it on live, but I'm waiting for it to start. The market's kind of just choppy right now. Let me put this up. I'm trying to schedule this stream. All right, so yeah, this is called Communicopia. All right, so market's breaking lows again. I'm gonna start buying this dip again. It's a little risky, and I gotta pay attention to it for sure. But I took some piece off. All right, just made another $40 here, so we are back green on the day now, which is nice. Kind of back and forth price action here. All right, so again, we got this little drop. Again, they speak in about 20 minutes, so there's Jensen. All right, so again, Jensen Wong speaks. Yeah, we're gonna stream it live. I don't know. Maybe I should. Yeah. I guess we're going to do... yeah, so we got that live already. Again, if you haven't already, check out TopStep, funded account program and futures. We built up a good little profit today, despite kind of it being a volatile day here. You know what I mean? Like, we have built up like a good little bit of profit. You know? So we have built up a good little bit of profit here. And again, we'll see if we continue this. I'm trying to make sure I spelled this right. Communicopia. COOCOMMUNICOPIA. Okay. All right, so yeah, Communicopia. It's gonna be Jensen Wong. All right, so we got more breakdowns. Yeah, so again, we got NVIDIA presenting a... The question is, how much does it influence the stock market? I don't know. You know, I really don't know. Yeah, so it's Communicopia. Yeah. Alright, so still breaking down, man. Look at the market dump, dude. Yeah. Yeah, so we got this live here. And again, we're going to redirect to this. like I said, the market's dropped. We're up a little bit. I'll take that. I'm just glad to be up a little bit today, to be completely honest. Again, we're going to redirect to it, so you'll be able to watch the whole thing live as it happens. So, yep. Here, I think I forgot to put the Top Step link up in the description. So again, if you want to check out Top Step funded account program, we've been able to take small size and let my edge play out. Where I think if we weren't able to use such small size, I don't think we would have been green today. I think like we were able to use the good thing about Top Step. Again, the biggest edge in trading, in my opinion, is that I'm able to trade with no commissions. And that's a powerful thing that like not a lot of people are able to do in futures. No commissions in futures is a powerful thing. And so I'm able to actually end green. You can kind of see me run up some money here. I had some losses, but we also had some wins today, and we were able to lose money. We lost, we didn't lose money yesterday either. We ended up making money. And so, yeah, we ended up making some money. And, again, I kind of have this contrarian trading style. $11, $24, $25, $27, $11, $5, $5. We lost 40, 45, and 60. We made 15. We made 11. We made 6. So, but overall, we had more wins than losses today, and we ended up green, and we were green yesterday as well. So yeah, I'm gonna move over to the NVIDIA stream. I'll see you guys over there. Again, if you want to check out Top Step, it's literally, in my opinion, the biggest edge in trading with zero commissions. You can day trade the S&P, the NASDAQ, basically the SPY and Q price action. Looks just like NVIDIA a lot of the time in price movement. You can day trade short, buy market, sell market, very similar to day trading stocks. The risk is much less. They give you a demo, test your skill with it. If you pass the test with their demo, they fund you the same amount. So they give you a 50K demo. You got to make 3K without losing 2K. If you do that, they fund you. If you fail, you only lose what you pay for it. In this case, the base one's only $49. They paid out over $40 million. Again, zero commissions. If you use Top Step X as a platform, you got to use Top Step X. There's the link. Check it out. And again, as soon as we close this stream, it's immediately going to bring you to the NVIDIA stream that we're doing today, the Jensen Huang speech for NVIDIA. And so again, as soon as we close the stream, it should immediately bring you there because we are redirecting straight to that stream. Let me make sure this is the right redirection for today. I'm pretty sure it is. Yep. Okay, so yeah, as soon as we close this stream, it's going to bring you there. If it doesn't bring you there for whatever reason, you can go to this link in chat right here. So if it doesn't bring you there, you can go to this link. There's the link right there. Right there in chat. Hey, I love you all. You'll have a great day. I'll see you guys over at the new stream.